Thank you for joining me. I'm Alex, and I'm excited. And yes, this is my excited face. So, we're talking about Corning today. And Corning is one of those companies that is really interesting, even though they basically have three products. They are a producer of fiber optics and glass, and they actually make dishes that you can cook in. And the most important thing that they make is glass for displays like this one. So if you have an iPhone, the glass in front of the display is most certainly made by Corning. If you have a Samsung phone, the glass in front of the display is most certainly made by Corning. And they make glass for, iPads, TVs, all kinds of things. And what Corning has going for them is that it's extremely scratch resistant and extremely hard to break. And they have a lot of competitive advantage versus the Chinese manufacturers that are trying to get into the market. And Chinese manufacturers, as you may know, are trying to get into all the markets. But Corning, because of the fiber optics and the display glass businesses, is very interesting for me because both of those are expected to grow significantly over the next few years. So, current price of $29.89 plus 94% today or yesterday because you're watching this tomorrow. The S&P is up 1.2%, so basically keeping up with the market, no significant difference there. The PE is 17, which again, decent if you assume that they're growing a lot in the future. Obviously, we shouldn't be assuming things, but you kind of have to. Dividend yield of 2.9%, which is obviously not too shabby, not great, obviously, but 2.9% is quite significant, especially with a payout ratio of 45%. So they could be growing their dividend a lot if their revenue and their earnings are going up, which I assume will happen, but we're just going to have to see. Their revenue growth is about 10% annually. That's the last 3 years. Before that was 2-ish, 3%. So last 2-3 years, pretty good. 10% is a decent growth. Earnings very inconsistent. Last year they made a profit. The year before they had a huge loss, and the year before that they had a profit. The year before that they had a small profit. So earnings very inconsistent, and as is the problem with many of these tech companies, which I'm going to just throw Corning into, whether they like it or not, because they have to spend a lot of money on research and development of new things that may cost them a lot in the short term and may or may not work out in the long term. So there's definitely risk factors there. And they're set to be making glass for foldable phones, which is extremely difficult and extremely hard to develop, obviously, because glass tends to break when you fold it. So earnings growth inconsistent because of research and development, because of inconsistent revenues. There's obviously ebbs and flows to the cell phone market, to the fiber optics market, to the, well, cookware not so much, but that's not really that huge contributor to the revenue. Total assets 27 billion, total liabilities 13 billion, and net tangible assets of 8.6 billion. So I rounded down the total assets and liabilities, 13.6 billion in liabilities, 27.5 billion in assets. I rounded both down, even though I shouldn't be. So definitely a good balance sheet, definitely something that I would be very happy owning. So what are we left with here? So we have decent growth, but not enough for growth investors. So if you're investing for growth, I would probably look elsewhere. We have decent dividend yield, but I'm not sure if that's enough for a dividend investor. But I think that 2.9%, even if you're investing for dividends, is not bad. And the growth in the future is probably offsetting a lot of those of the bad dividend. Now, I don't want to call it bad, because I think as a dividend investor you should probably even be owning stocks like Walmart, who only pay about 2%, because of the extreme safety of the investment. With Corning, I don't see them going away. I don't see them going bankrupt at any point because of the future proof of their business. So the thesis here is that 5G is coming, and 5G needs a lot of fiber optics, which seems counterintuitive, but all the cell towers they need for 5G, they need to have a fiber optics connection. And obviously, there's a lot of fiber optics coming to homes as well, because cable companies and internet service providers do not want to lag behind either. Obviously, they don't want to just lose all their market share to 5G, so they're going to be building out their fiber optics as well. And the display glass is obviously going to pick up significantly if the economy keeps growing or after the next recession. I also think that with 5G cell phones coming out, will be a huge boost to the display glass business, because there will be way more phones sold with way more display glass, and the phones are also getting bigger, which means the display glass gets more expensive, which means more profit for Corning. So on the whole, I think 5G is a huge growth factor here in several different ways, and so I really think that the stock is going to go up significantly. I think the profits are going to go up significantly. And so I think as a value investor and as a dividend investor, you should probably be looking into the stock, especially if you're tech focused or if you want to diversify, because huge potential for growth here. And I don't see many risk factors for the business as a whole. I think that all the risk factors are more short-term, medium-term, and I don't see any long-term risk factors for the business. We're always going to need fiber optics. We're always going to need display glass. We're even always going to need cookware. So very safe, I think. So I think the PE is pretty justified. Definitely seems to be a good stock to look into for growth investor, for dividend investor, and for value investor. Although the growth side, you need to make some assumptions about the long-term growth, but definitely look into it. That's it for today. If you haven't subscribed yet, make sure to do so. I'm coming out with more videos every day before market open. I hope you have a successful day.